Hey traders and investors, it's Serge Berger here. Today, let's have a look at Amazon.com. I'm seeing a trade starting to set up. Before we look at the actual trade in more detail, it is of course important that we keep in mind where Amazon has come from, sort of how it got here, and sort of what has resulted year to date. So of course, Amazon very orderly ascent off 2008, 2009 lows and started getting into this nice consolidation pattern here in the 2014 period, and then last year had a real vertical move. Now, I always say that when stocks have a vertical move, they ultimately end up mean reverting even more sharply, and indeed, that's exactly what took place in Amazon.com. And this is something I always talk to Clubhouse membership members about almost on a daily basis. That these vertical moves are really a trader's and active investor's best opportunity to lean short on a stock, and there's all sorts of opportunities and strategies one can apply there. So in the year for the year to date, the stock, or actually I should say from the peak in January down to last week's lows. The stock dropped already about 30%. It's since rebounded a little bit, and so just so you know, I think the stock probably has to fall into the low to maybe mid 400s. That's where I think there's more better or lateral support, including from a Fibonacci perspective as well. If we now move in a little bit more closely into Amazon.com, you can see that the stock actually in early February dropped below its 200-day moving average. That's this red line for the first time since January of 2015. So the stock actually hadn't been below the 200 days since January 2015. That's not a meaningless period of time to have been above it. So that's actually fairly important. Now, what's taken place here is that the stock, as you can see, is actually rebounded back to that 200-day moving average, and I think once we have a bearish reversal confirmation, which we don't yet have, but if we get that, this could be a really interesting opportunity to sell short the stock or buy some puts, whatever you might want to do. There's a little bit of thing called confluence resistance, which Clubhouse members always hear me talk about, and that's really where the highest probability trades set up on a daily and on a weekly basis and on a monthly basis and just about anywhere. So what's happening here is that the stock is bounced back to its 200-day, again, previous support. Maybe that's now going to become resistance. Again, we don't have it yet, but it's an interesting spot to look for because we have resistance from 200-day moving average. We have horizontal resistance. You can see that very clearly. This used to be resistance, then it became support in January, and now it may potentially once again be resistance. There's other measurements we do from a Fibonacci perspective as well, and those measurements to find some confluence resistance here. So the trade setup that I see setting up, it's not yet complete, but it looks like it's potentially setting up, is once we see a bearish reversal, so a bearish reversal, a red candle of meaningful proportion, that would trigger an alert to go short the stock or buy puts or whatever you want to do for a move at the very least back to the early February lows and probably towards the mid to low 400. So again, I stress that this trade is not yet signaled, but it's something to look for if and when that signals. That could be a real interesting opportunity in the stock. So please like this video. That's how I move up in the YouTube ranks. Subscribe to my channel, guys. And as always, I'll see you in the next video.